Good evening, everyone. Welcome to the channel. Today I am going to talk about Hepalink interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Shenzhen Hepalink Pharmaceutical Group Co., Limited, offers a diverse range of businesses and services across various segments. The company provides finished dose pharmaceutical products, e.g. Prolongin, Inhixa, active pharmaceutical ingredients, API products, e.g. heparin, enoxaparin sodium APIs, pancreatin API molecule biologics contract development and manufacturing organization, CDMO, services research and development, manufacturing, quality management, and program management services technical support services, property management investment management, and consulting biopharmaceutical technology development, and consulting equity and venture investment, activities trading of medical and biopharmaceutical products. Hepalink stock price skyrockets. A year of exceptional growth over the past year, Hepalink's stock price has surged by a staggering 89.19%, driven primarily by exceptional financial results and strategic business advancements. The company's strong half-year and annual performances have been key contributors to this growth. Exceptional financial results were reported in both HON 2024 and 2024, with net profit attributable to shareholders increasing by 438.05% and 451%, respectively. This was attributed to securing premium overseas orders, robust sales in the API business, and significant operational improvements. The company's CDMO segment also saw a remarkable growth of 41.73%. Market expansion and product approvals have further boosted Hepalink's stock price. The company secured market access for its products in Thailand and New Zealand, obtained approval for its product IV-inoxaparin in South Africa, and received EU manufacturing authorization for its enoxaparin injection. The progress in Hepalink's innovative drug pipeline has also been a significant factor in the company's growth. The initiation of a Phase 1 clinical trial for its H1710 injection indicates advancements in its development efforts. Overall, Hepalink's strong financial performance, strategic business developments, and market expansion have provided a solid foundation for its stock price growth over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown significantly due to the sales of finished dose enoxaparin sodium pharmaceutical products, which increased by 30% year-on-year. Additionally, the implementation of a dual-track operating model in the U.S. market and the establishment of collaborations with leading healthcare groups have contributed to growth. The commercialization of new products such as fosaprepitant dimeglumine and gabapentin capsules has also driven revenue growth. Revenue decline drivers. On the other hand, the API business has declined by approximately 40.5% due to low export prices for heparin APIs and industry competition. The sale of goods has also declined by 0.7%, mainly due to lower selling prices. Furthermore, the decline in pancreatin API sales has contributed to a revenue decline of 60.9%. Net income and profit margins. A decline in performance. The financial performance of the company has experienced a decline in net income and profit margins over the past year. Net income decreased by 36.4%, with a significant drop of RMB 100 and 41.8 million year-on-year. This decline is also reflected in the decrease from RMB 900 and 99.3 million to RMB 800 and 9.2 million. Profit margins have also taken a hit, with gross profit margin decreasing by 6.3 percentage points year-over-year. The API business has been particularly affected, with its gross profit margin dropping to 23% from 41.7%. This decline in profit margins can be attributed to fluctuations in market environments and intensified competition. The decrease in net income and profit margins is a cause for concern, indicating that the company needs to reassess its strategies to improve performance and stay competitive in the market. The company's financial performance indicates a consistent generation of positive operating cash flow. For the years 2025 and 2024, the net cash flows from operating activities were RMB 1,048,809 and RMB 1,294,842 respectively, both of which are positive figures. This trend suggests that the company is efficiently managing its operations to produce a steady stream of cash inflows. The company's debt level has experienced fluctuations over the past year. while short-term loans increased by 5%, RM 119 million, from RM 367 million to RM 486 million. Total debt decreased by 12.5%, RMB 433 million, from December 31, 2024 to June 30, 2025. Pledged bank loans also saw a significant decrease of RM 162 million. Interest expenses have shown a notable decline, with interest expenses on bank borrowings decreasing by 45%, RMB 32,539, from RMB 71,970 in 2024 to RMB 39,431 in 2025. Overall, the trend suggests a reduction in debt level and interest expenses, indicating a positive financial shift for the company. The company's financial performance varied across different segments and regions. Notably, the heparin industry chain and finished dose enoxaparin sodium pharmaceutical products showed strong growth. The CDMO business also performed well, despite some challenges mentioned. Additionally, the European market for enoxaparin sodium formulations demonstrated a positive trend. On the other hand, the heparin industrial chain business experienced a decline of 0.7% year-on-year, while the API business faced a challenging market environment and cyclical lows in prices. These underperforming segments highlight areas that require attention to improve overall financial performance. Management is optimistic about the company's future prospects. Key initiatives include advancing new drug development, conducting a phase III study for R-301, Salvicin, and accelerating the strategic layout of innovative drugs. Additionally, the group aims to fully utilize its remaining net proceeds by November 30, 2025. The company views equity investments as strategic and has designated them at fair value through other comprehensive income. The company has a history of paying dividends to its shareholders. In recent years, it has declared and distributed significant amounts, with a total of RMB 366,824,051 paid out in the form of dividends. This demonstrates the company's commitment to returning value to its investors through regular dividend payments. Concerns about inventory buildup or supply chain disruption exist. The financial summary highlights concerns regarding inventory buildup and supply chain disruption. Escalating trade and tariff barriers have intensified supply chain tensions, page 8. Furthermore, an analysis of inventory levels reveals that finished goods increased while raw materials and work in progress decreased, page 69, indicating potential issues with inventory management. Additionally, a notable increase in finished dose pharmaceutical products inventory by RMB 97,030 on page 50 suggests potential supply chain disruption risks. These indicators suggest that companies may face challenges in managing their supply chains effectively. That concludes the financial summary for Hepalink. Feel free to comment below, and I will be happy to answer them when possible.